Hey everybody, this is Leon, the Realtor. Many buyers right now are sitting on the fence waiting for that cut from the Federal Reserve, expecting that it's going to affect the fixed mortgage rate as well. Will it affect it? Well, the short answer, it may not. They're not directly connected to one another. You see, the Federal Reserve controls the federal fund rate, which is basically the rate that banks lend money one to another on a short time, on an overnight loan. So things like a car loan, a credit card, that will be affected immediately. But for something long term, for 20, 25, 30 years, that's not always the case scenario and not necessarily translate itself into a lower mortgage rate. A fixed mortgage rate for such a long period of time is determined by different factors, things like the prediction for the inflation, is it going to be high, is it going to be low, the situation, the global market situation, because what happens in the Middle East affects us over here. What happens in China affects us over here. And this is all taken into consideration. But the most important factor is probably the US Treasury bond, because when investors looking for safety, they leave the stock market and start to buy bonds. And when that happens, this is what actually can lower the fixed mortgage interest rate. So I hope this was helpful. I want to wish you all a happy Thanksgiving. If you're considering buying or you need an advice or you want to just ask and you have some questions, I'll be more than happy to help. Until the next time, thank you for your attention.